And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. It's Tuesday, October the 18th. My name's John Hoagland. Thanks for trusting me with your time as we seek accurate context. Always think risk management first and try and stay patient in our markets and in our trading today. Good morning. Hopefully, if you are already in the markets, you've got things going your way. Our equity's certainly already on the move early this morning, but we are looking for some economic information due out. At 8:15, we've got industrial production, 9 o'clock housing market index, the beginning of 3 days of housing information due out. And at 1 p.m. Central today, we have one of the talking Feds, Raphael Bostic, is speaking. So already this morning, we see the stocks are continuing higher on the shoulders of some good banking earnings, leaving last Thursday's excess low well behind us now. As far as earnings today are concerned, Goldman Sachs came out just largely as expected. Johnson & Johnson came out better than expected. Just kind of a smaller list at the very beginning of earnings season. We are looking for Netflix at the end of the day today. They're seeking to snap a three-month losing streak, I think. We have to see how that happens later on. We've got crude prices continuing to leak to the downside on further questions on demand and in a slowing global economy. So we've got some things to think about and some things to look at throughout the day today. It is Make Hoag Money Day today. Here's the link to get the link to sign up for Make Hoag Money. If you want to join us in the Zoom meeting, use that link to get signed up for it. You can watch it on YouTube too. You just won't be able to vote for the trades that we're talking about taking. It's all right, though. I'm trying to keep an eye on the chat in both the Zoom meeting and on the YouTube channel just to see what the conversation is looking like. And I'm looking forward to getting back to making Hoag money today. We'll see if we can make a little bit of money. It's going to be an interesting one. The way the markets are setting up the open for regular trading hours at 8:30. Make Hoag Money starts about 8:20 right after the market forecast, so we'll try and get through the market forecast in due time here, so we have plenty of time to get some discussion before the equities open. Next week, I'm expanding Make Hoag Money. Mondays and Wednesdays, it's going to be from 2 to 3 p.m. We're going to catch the closes for Make Hoag Money on Mondays and Wednesdays. Tuesdays and Thursdays will still be at its regular time at 8:20 in the morning. So 4 sessions of Make Hoag Money every week. My goodness, the money we are going to make. We all know that there's going to be losses. I'm confident that over time we're going to find a way to make me some money. So looking forward to expanding that. That's going to start next week. I've been talking about doing that for a while. A little problem here for the last couple of weeks, but now I think we're ready to get started with the expanded Make Hoag Money. As always, make sure you hit the lucky like button. Share, comment, question, feedback, heckling, and love are always welcome on the forecast. Recap everything we do. Make sure you subscribe to our YouTube channel. You get notified when we do go live. A brief look just a few minutes ago at the VIX, the dollar index, and the yield on the 10-year. VIX is off just a little bit from its close yesterday at 30.76. Still a relatively high number. A little volatility, a little fear still in these equities markets. Dollar index down at 112.12. It was about a week or two ago. It put in a new 20-year high, I think, at 114.78. So it's come off considerably from that recent high. And the yield on the 10-year off down below 4% again today at 3.975% last I checked. Good morning to everybody. Orion, first in the room. You win the prize. Scott saw, and he conquered. Dimitar, we've got Joel Embiid, Shaw Cunningham, Sonny, Tachyon, good morning. Ron Merlot, good morning, and you stay classy, Ron. Jules, Will Doherty, The Rooster, Caprice, Glitter Sandwich, Sarah Hall, good morning. Prayers and love to you as well. Grim Reaper Trader, good morning. Dark Kevin's going to take a break today and watch the ballet of the markets. It certainly does seem sometimes to be a ballet watching them dance, doesn't it? Good morning, my man Vince, D.A., John Doherty, good morning. Unicus with his quote for the day. We all appreciate these Unicus. Please keep them up. Character, like a photograph, develops in darkness. Kind of an October one there. I like it though, Unicus. I always used to ask my dad when I was a little kid, there was a lot of funny people on the trading floor, a lot of characters, a lot of funny guys. I said, why is everybody down here such a character? And he always told me, well, hard times breed character. I should have known then what I was getting into futures trading. Naztic, good morning. Gaston, good morning. Sean, Anissa, good morning. Kevin, good morning. Wonder what the topic of Bostic's speech is. I don't know. I didn't look that deep into it just yet. Gaston, talking about SPY and some calls he bought yesterday. Wish he could sell them right now. Patrick, Cesar, Frederico, good morning. Joe, good morning. Charles, Trading Research, Diggable Seeker. David, Serenity Trader, good morning. Kabayan, good morning. There's a new name. Welcome to the Market Forecast. Thanks for popping in and saying good morning. Jay Zerain, good morning. Wish my account would develop in darkness. Well, it said something that does take some time, and I think developing slowly and over time, being able to maintain that account and build it over time is going to buy you the time to get better and better at what you're doing here, Kabayan. Daryl, Stephen, Dowitzer, good morning, Frederico. That's why many engineers are also called characters. No, because I am one. I know a couple of engineers. I got two brothers who are engineers. Good, Kabayan. New to Top Step. Loving it. Excellent. Bostic to apologize for his criminal activities. Dead letter opener. You are a funny guy. You are a funny guy. You obviously have been trading for a while because you're a character. Rusty Golfer, Luke C., and Jordy, good morning, everyone. Glad you're loving it, Kabayan. We're looking forward to your success. All right. Make Hogue Money. We got everything taken care of. We're going to jump into the charts here so we can be ready for Make Hogue Money at 8:20. Let's start here with the daily in the S&Ps. Getting real close to that weekly kickoff high here already. Here we go. Good morning, Dan Trader. All right. So here's that excess low we put in on Thursday. That's a really important feature of these charts and of the profiles. Last night we added about 9,900 to estimated, or yesterday added about approximately 9,900 in open interest on softer volume. That doesn't worry me in the futures. It's when the volume drops in the New York Stock Exchange, and it didn't. It was actually a little bit higher than the previous session yesterday. So that tells me that the volume did come in a little bit more to the auction to the upside. We added open interest. So right now, the auction off this excess low here appears to be healthy and now appears to be primed to test the next important inflection level, which is weekly kickoff high, which is 37.78. It's the naked point of control, really, from the session on the 6th of October. So we're just getting up to some levels where we've got some visual targets. Those visual targets are going to probably do a good job of telling us if this rally is real or if it's just getting too long and likely to change direction or at least fall into some sort of balance. The market state to me is range bound here. We've got some highs here, we've got some lows here. We're inside the weekly kickoff range here, but we are attempting to continue to push up against that important inflection level. It's going to be, like I said, an interesting make hog money session today because we do have an important inflection level with which to work with. A couple other things I want to show you on the profiles as well. Let's move on to the 30-minute chart. So yesterday we had a lot of overnight longs that continued to get paid. We continue to have a lot of overnight longs that continue to get paid. We've got our weekly kickoff level right up here with that naked point of control that it's partially based on. It's the last naked point of control before we really break out to levels that we haven't seen in 3 weeks, a month, and longer. So that's why this level here is so important. We took out the last week's high. We held last week's high as support, looking to get a test of that weekly kickoff high. Check this out. We talked about this on the recap yesterday. The recap doesn't get viewed as much, but we had what may have been viewed as an island top, but price came down to it. This would be more of an island bottom. We did put an island top here. We looked lower. Now we've got another island bottom here. The market is going to be opening relatively close to that prominent naked point of control from the 6th here, and it's going to go from a gap back through a gap. So this double island bottom here might really be something we're going to have to pay attention to. Now, we know we have a ton of excess below here. Price got too cheap. Buyers scooped those up quickly, and we have never returned to those prices. Now we've got another situation where we're going to be opening with a gap from a gap on a low, our most recent low. So this is a potentially powerful indication that the low may be in for a while. Anything can happen. Anything can happen. So we're going to be, I think, looking to see if we're going to find resistance up against this important inflection level, or if we're going to find acceptance above it and go looking for further visuals, which could take us all the way back up to 38.92, this naked point of control here, and even points higher. I don't want to get that deep into this, but we've got certainly a decent opportunity with some really good, important nuances and some good reference coming at us for Make Hogue Money. So make sure you attend. We're going to be opening with a gap, after a gap, island bottom. I don't know that I've seen a double island bottom before, and that really could be something powerful. Of course, again, anything can happen, and somebody says the wrong thing, or some bad news comes out. It could change always in a heartbeat. Here's crude oil. Okay, we're still in the rollover blur. We should be trading the December contract. The overall open interest lost 9,600 of it, but the November contract lost 28,000. So it's almost as though there was an increase in open interest to the downside. Volume was actually pretty decent here in the December contract yesterday. Of course, it's because that's where all the volume is moving into. Short time frame weakness continues. We've got lower highs, lower lows, and we've even got a lower low in the overnight last night. The overall drop in open interest seems to be unhealthy for the short time frame auction to the downside. It's rollover, so it makes things very blurry, and we got to remember that our longer time frame traders are more interested in getting a cheap roll than becoming directional with their activities. So take a look at the 30. Where are we? Well, Friday's range, yesterday's range, today's range. We've kind of fallen into a rollover area of balance here. The last week's low seems supportive, at least for now. It's been stabbed below, but it's looked below a few times. Looks like it's going to be opening right on it. We're opening in range but below value. This last week's low here seems somewhat pivotal. But again, we are relatively centrally located in the bigger time frame. Weekly kickoff high and low, we're centrally located. So those aren't going to be coming into play today. So we're going to be looking for short time frame information to look for our activities, to look for our opportunities. The last week's low seems like an important level for us. Take a look at the opening range here. Let's see if we get it. There it is. So opening range has broken to the downside. The low of the opening range, 84.17. The high, 84.47. A 30-tick opening range. Still makes it a little bit rich. But I'm not going to be doing anything because we did open in range. But because of the location of last week's low, this might be an interesting spot for us. All right, take a look at the NASDAQ. NASDAQ always has to throw a horseshoe into things. We had an increase in open interest in the S&Ps. We lost open interest in the NASDAQ of 6,400. The profiles of both the NASDAQ and the S&Ps yesterday looked like short covering, and that's what the open interest is telling us in the NASDAQ. So open interest in volume, short covering more than new longs. But the NASDAQ has had a deeper dive, and I think we trapped more shorts down near the lows in the NASDAQ than we did in the S&Ps. What this market needs now, what the world needs now is love, sweet love. No, what this market needs now is new business. It needs new buyers to come into this market, and it would appear that our overnight longs are kind of getting that idea that that might be a distinct possibility. We've got a little bit more space to get up to weekly kickoff high here in the NASDAQ than we do in the S&Ps. 605, 605. We're a little bit off here. I'm going to put that more closer to 605. There we go. So we do have more space to get up to that level, but the market has been pushed further to the downside. So we've chased out a lot of the shorts. Are we going to bring in new buyers is really the question that I have. Still, I mean, almost in a range-bound state, still putting in lower lows, lower highs in the longer time frame. Take a look at the 30. Overnight longs continue to get paid. P-shaped profile, short covering. That's supported by the loss in open interest. So we're looking for new buyers to come into this market. Last week's high, supportive once it got through there overnight. The market went through it, came back to it, found support, and now seems to be continuing to try and push to the upside. We've got a couple of visuals up here. We've got a negative point of control. We've got weekly kickoff high. This is not out of reach by any stretch for the NASDAQ. This excess low, so important. So important. We talked about this on Friday. That excess, that price pushing down to that level and just being so swiftly rejected, very important information. We should have been looking for opportunities to buy weakness, which made Friday kind of a nightmare day, but we don't get to choose. It's still an overlapping to higher range. But value was inside. Now we're continuing to see this market push to the upside. How long do we have to continue to look for opportunities to buy breaks? Until there's a change, I think that's the only thing we've got. Here's the now this includes the overnight session, so it's a little more difficult to see the gap here. We got the gap here. We have the gap from and to, and then the gap from and to this area, and now we're opening with a gap. So we've got the same island low, island bottom, possibly here that in the NASDAQ. So there's some really important nuances And hopefully those are going to lead us in the right direction. There's no guarantees of anything, of course. Gold, inside regular trading hour range. Inside regular trading hour range. Yesterday's range was inside. Today's is inside. This market just seems to just not want to break out of these trend lines that we've got so neatly placed on here. It's just a tough day. It's a tough market. I think it's been a tough market. We're centrally located between weekly kickoff high and low. We didn't get a test of last week's low here. We've gotten a test so far of this trend line relatively close to it anyway. Looking at the 30, we lost 4,200 in open interest yesterday. That seems like an awful lot. That seems like maybe some longs kind of just continued to get out as the day lingered on. Now where are we? We don't really have any inventory from overnight. We've got a little bit of gap rules here. We've been unable to close the gap from yesterday's range, but again, we've tested right back to this trend line, and that seems to be continuing to bring resistance. These two trend lines are just kind of closing in on this market. It's either going to be some sort of a breakout that's going to take us outside of this, or it's just going to happen over attrition. I'd rather have a big breakout to be able to catch and make some money on it, but if it just kind of wanders out of this, what are we going to do? I think we're still range bound. We're looking for the extremes, and we're kind of focusing on these trend lines for possible opportunities. It seems the market is just really shrunken down to very small opportunities, at least for now. But again, that can change in a heartbeat. ACH. Anything can happen. Euro has found a couple of bids here with the dollar coming off its recent highs. Volume, however, was not all that great on that push to the upside, although we did add 6,700 in estimated open interest push to the upside. Again, centrally located in weekly kickoff levels, overnight support at last week's high. It's kind of funny how that works sometimes. That open interest increase seems to be building energy, but certainly not showing so much in volume, which may change today. We already see some pretty decent volume for as early as the day is right now. Take a look at the 30. So there's our push yesterday, obviously. Pretty decent trend day to the upside, finally finding an area of balance, which puts the point of control up there. No real overnight inventory. The market kind of looked like it was going to open in an area of repair, which this would certainly be an area of repair between areas of balance and high volume areas. Seems to be rejecting that. I'm not thinking about selling this market. I would think about maybe if we can't maintain price above the overnight high, because we've got a weak overnight high here. So if we break out and come back in, that might be an opportunity for us to look for the market to pull back a little bit. Keep your eye, of course, on the dollar. All right. Well, the 10-year certainly seems to want to continue to toe the line. It is towing the line. It stepped over, got smacked back by this drill sergeant, has been towing this line ever since. We lost 2,300 in open interest yesterday. Volume has been starting to drop. Is that telling us that the auction is tiring to the downside? Largely, we're range bound here. We're just towing this line because that's what traders are looking at. Volume and open interest both lower. Auction doesn't like that. The auction likes increasing volume and increasing open interest. The opposite seems to be happening here. We've come such a long way, and whatever rates are doing, you know there's a whole bunch of shorts in this market. We accept above this trend line. I think that could be a pretty decent move in the opposite direction. You see that we're lower, 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 lower. We have a wicked upside move. We try and push lower. Another wicked upside move, and then rejection back down below that level. Are we primed for another wicked upside move? The opposite moves tend to be fast, vicious, and nasty. If you can catch them. Because you're going to catch a lot of traders looking for those, and then they get disappointed. They're trying to catch it again, they get disappointed. They try and catch it again, they get disappointed. When's it going to happen? Could it be today? Don't stop looking. We never know. As the market turns. 30. Coiling. Gotta look down below it this morning, but back in value. Try and stay chill. My thing that I'm watching is this trend line here. If we accept above this trend line, I'm looking for a pretty decent move to the upside. I've been wrong a billion times with that. I've been also right a whole bunch of times with that. Just looks like it might be an interesting opportunity for an execution. Here's all right. This natural gas has been a pill. Head and Shoulders. Target. We're finally going to get there. We had an increase in volume yesterday, and we know that we're a week from rollover here. So an increase in volume in the November contract on this down day says something. Although we lost 13,000 in open interest. 18,000 of that was in the November contract. So we added open interest in the December and future contracts while we lost open interest in the November. It's almost like we added open interest on a down day on higher volume. Good auction. Healthy auction. I think the target for the Head and Shoulders is within reach. Here's that 30-minute. Balance, acceptance, digestion, acceptance through time at lower pricing. It's the way it looks to me, but this is going to be a tough day, tough trade, tough spot to try and see if we're going to come down and touch that target from that Head and Shoulders. We've got the gap, we've got the weak gap. There's the space, there's the time, there is the opportunity. Is it going to happen? We'll stay tuned and see how that plays out. Maybe we'll see something on the recap about it finally reaching that level. I can't trade that market. It's crazy. It makes me nuts. One. Gaston, Top Steps made you a better trader. That makes me happy. Not just futures, also stocks and options currently in pro-funded account, chipping away at this 5,000 profit target. You're welcome, and I'm so happy that you found some really good success here, and hopefully we're going to see that success continue. Just take your time. Juan, good morning, everyone. John, how do you read this open close to weekly kickoff high? What's the difference opening above or below it? Thanks in advance. Well, opening above or below it, if we were to open above it in the S&Ps, I think that might be a lean towards acceptance of higher pricing. And we're already seeing higher pricing. If we can't hold above it, then I think the auction may be looking for an opportunity to rest for a little while or even see a little bit of a pullback off of that level. I use regular trading hours. Hi, Kevin. How are you? It's good to see you. To use regular trading hours for weekly high and lower electronic. I've been putting the extended trading hours as weekly highs and lows. I know that there's some, there's some good reason for using regular trading hour highs and lows. I've just been choosing to use the extended trading hours highs and lows. As long as it's done consistently, I think that's what's most important. Anissa, my pleasure. Mike, he's got some historical days there. Juan, my pleasure. And all right, let's take our deep breath, and I'll meet you in Make Hogue Money here in just a couple of minutes. Stay calm, centered, grateful, humble, and creative in your trading today, ladies and gentlemen. Looking forward to seeing everybody for Make Hogue Money. If not, hopefully you have a great trading day. Don't forget we have Coach's Playbook today, and then we also have the recap at the end of the day today. So looking forward to seeing a good day for all of you. Trade well. I'll see you in Make Hogue Money in just a couple of minutes. Trade well.